Imagine you're at a bustling farmer's market where goods change hands every minute. The air is alive with the chatter of vendors hawking their wares, buyers haggling over prices, and the rush of transactions happening at lightning speed. Now, take that image. Replace the stalls of fruits and vegetables with companies, and you've got yourself an idea of the stock market. In this unique marketplace, instead of buying apples or potatoes, investors and companies trade shares. You might be wondering what shares are. Well, they're nothing but small pieces of ownership in a company, just like how you'd own a bag of apples after buying it at the farmer's market. When you buy shares, you own a tiny slice of that company. Now, the price of these shares isn't fixed like the price of apples or potatoes at your local market. They don't stay the same from dawn to dusk. They fluctuate throughout the day, just like the tides of the sea. And what causes these fluctuations? You guessed it right. It's the age-old principle of supply and demand. When more people want to buy a company's shares than sell them, the price goes up. Conversely, when more people want to sell shares than buy them, the price goes down. It's a bit like if everyone at the farmer's market suddenly wanted apples, the vendor could raise the price because the demand is high. But here's the catch. Unlike the farmer's market where you buy goods for consumption, in the stock market you buy shares with the hope that the company will grow and become more valuable over time. This way, the small piece of the company you own will also increase in value. And just like at our imaginary farmer's market, the goal in the stock market is to buy low and sell high. It's about spotting the apples of the stock market when they are undervalued and selling them when the price reaches its peak. It's a game of patience, strategy, and a bit of luck, all set in a market like no other. Our bustling market didn't always exist in its current form, oh no. It started as a whisper, a small gathering. Picture, if you will, the year 1602. The place is Amsterdam, a city buzzing with commerce and innovation. But something new was about to take root, something that would change the world of finance forever. This was the year the Amsterdam Stock Exchange was established, the first of its kind in the world. It wasn't just a marketplace for goods, it was a marketplace for ownership. This was where the concept of a stock market was born, a place where people could buy and sell shares in companies, becoming part owners in the process. But what's a market without something to trade? Enter the Dutch East India Company. This behemoth of a company was the first to issue shares of stock to the public, an innovative move that would set the stage for the future of investing. The idea was simple yet revolutionary. By selling shares of their company, the Dutch East India Company could raise funds from the public to finance their ventures, and in return, shareholders would get a piece of the profits. The Dutch East India Company's novel approach to financing was a hit. People flocked to buy shares, eager to have a stake in the company's potential profits. This marked a shift in the way businesses were funded, from relying on a single wealthy patron to drawing on the collective wealth of the masses. The stock exchange provided a platform for this exchange, a place where buyers and sellers could come together to trade shares. It was a system that allowed for greater transparency and liquidity, attributes that are still valued in our modern stock markets. So, from a humble gathering in 17th century Amsterdam, the concept of a stock market was born, a place where anyone with a bit of money to spare could invest in a company and potentially reap the rewards. And so, the seeds of our modern stock market were sown. From these humble beginnings, the market grew and evolved, molding itself to the world's changing landscape. Imagine a seed planted in the fertile soil of global commerce. As the centuries unfolded, that seed sprouted, grew, and blossomed into the complex financial ecosystem we know today as the stock market. Let's take a swift journey through time. In the late 17th century, the world's first stock exchange was established in Amsterdam. This was the birth of a new era of trade, an era that would revolutionize the way wealth was generated and exchanged. Fast forward to the year 1792. Across the Atlantic, 24 brokers gathered under a buttonwood tree on Wall Street to sign what is now known as the Buttonwood Agreement. This marked the creation of the New York Stock Exchange, a cornerstone of global finance. However, the road was not always smooth. The end of the Roaring Twenties brought with it the Wall Street crash of 1929, a cataclysmic event that sent shockwaves through the global economy. Yet this was a pivotal moment that led to the establishment of regulations to protect investors and maintain the integrity of the market. As we moved towards the end of the 20th century, a new revolution was brewing. The advent of technology saw the introduction of digital trading, transforming the stock market into a virtual arena. No longer was trading confined to physical spaces and paper slips. It had entered the digital age. Today, the stock market is a bustling, dynamic entity, constantly changing and adapting to the world around it. It's an intricate web of buyers and sellers, of risks and rewards, a pulsating hub of economic activity. The evolution of the stock market is a story of resilience and adaptability. It reflects our ability as a society to innovate, to overcome challenges, and to create opportunities. It's a testament to the tenacity of the human spirit and the enduring power of financial ingenuity. Through ups and downs, booms and busts, the market has endured, a testament to the resilience and adaptability of the financial world. Now, you might be asking yourself, why should I care about all this history? Well, the answer is simple: investing. Investing, at its core, is about growing your money. It's not about quick wins or overnight riches. Instead, it's a long-term strategy for financial security. Think of it like planting a tree. You don't just put the seed in the ground and expect a towering oak the next day. It takes time, patience, and a little bit of care. The same goes for investing. You see, money, much like a seed, has the potential to grow. In fact, money has a superpower that seeds don't. It can compound. Compound interest, or earning interest on your interest, is one of the most powerful forces in finance. It's like a snowball rolling downhill, growing bigger and faster with every revolution. With time and patience, a small investment can grow into a significant sum. Investing in the stock market is one way to harness the power of compound interest. When you buy a share of a company, you're buying a piece of that company's future profits. If the company does well, so do you. Over the long term, the stock market has consistently provided positive returns despite short-term ups and downs. But investing isn't just about making money. It's also about financial security. Having investments means having a safety net. It means having the freedom to make choices about your life without worrying about the financial implications. It means being able to retire comfortably, help your kids with college, or even start your own business. Investing, however, isn't without risk. The value of your investments can go up and down, and there's always the chance that you could lose money. But with knowledge, strategy, and a long-term perspective, you can manage these risks and increase your chances of success. Investing is not just for the wealthy. It's a tool everyone can use to build a more secure future. So, if you're not investing yet, maybe it's time to start thinking about it. After all, the best time to plant a tree was 20 years ago. The second best time is now. So how do you get started in this bustling market of ours? Well, let's break it down, shall we? Imagine you're about to embark on a great adventure. Like any journey, it all begins with a single step. In the world of stock market investing, that first step is opening a brokerage account. Think of a brokerage account as your gateway to the stock market. It's like a bank account, but instead of holding your cash, it holds your investments. There are many brokerage firms out there, from traditional banks to modern app-based platforms. Each one has its own set of features and fees, so do your research and find one that suits your needs. Once you've got your brokerage account set up, it's time to start researching companies. This is where your detective skills come into play. You're looking for companies that show promise. They've got a solid business plan, a strong team, and they're in a market that's set to grow. The more you understand about a company and its industry, the better equipped you'll be to make informed decisions about whether to invest. And then comes the moment of truth, making your first trade. It's a bit like asking someone out on a date. You've done your research, you know what you're looking for, and you've found a match that ticks all the boxes. Now it's time to take a deep breath, press that buy button, and start your investing journey. Now, I want to leave you with one last piece of advice. Educate yourself, read books, take online courses, follow financial news. The stock market can be a complex beast, and the more you understand it, the better your chances of taming it. Remember, the stock market isn't a get-rich-quick scheme. It's a long-term investment in your future. So take that first step and see where the journey takes you.